Welcome back to the Hard Truths podcast. I am your host, Denver Biddle III, joined by my co-host, Steve Traub. And today is the second episode of this series in which we're going to be talking about, again, breaking down real estate investing from a 100 level, speaking to beginners, people that are new to this, and just really from a perspective of we're not assuming that you know anything, really. So there's going to be a lot of elementary terms and just, I guess, processes and procedures that some of you might be familiar with, but who doesn't like a good refresher, right?
That's absolutely true.
So this episode is going to be talking about really just describing hard money loans. One of the ways that you can go about funding your real estate investment projects. I think specifically for this episode, we're going to talk about fix and flips, kind of like a carryover from the first episode in this installment. Cool. So first off, how you doing?
I'm doing well. How are you doing?
I'm good. It's Friday. We're recording this on a Friday.
Yes.
And it's sunny, unlike yesterday.
Vibes are high.
Yeah, so we're all good. Cool. So let's just jump right into it, right? Cool. So, Steve.
Yes.
What is a hard money loan?
Well, a hard money loan, Denver, first of all, what a good question. But a hard money loan is a short-term loan that's funded by private investors, typically compared to someone going to a traditional bank or a traditional lender. If they're going to buy a primary residence or perhaps, another investment property that doesn't need work, they may utilize those options. But for this episode, we're going to focus just on hard money. Hard money is asset-based lending solutions, so we're lending more on the property than we are basing income, tax returns, that sort of thing. So it's a pretty good way to close quickly, and as you'll find out in the episode, we'll dive a little bit more into it, but hard money can be a really good option, especially for people doing fix and flips.
Gotcha. So kind of touched on it just a tad.
Yeah.
So in addition to it being a great option for people that need to close quickly. They've got a deal on the table. They don't want anybody else in it. They want to be the first, the first offer in. Speed is often, one of the most important parts in closing deals like this. What are some other benefits, speaking from the perspective of a real estate investor, when it comes to using hard money?
There's a couple of really good benefits to hard money in general. Like you said, speed is important. Keep in mind that closing a loan quickly may be really important to a seller for whatever reason. Could be important to someone that isn't even necessarily on the market. It's like, hey, if I'm going to consider selling this property that I own as an investment, I want to close in 10 days.
Right.
Bank or a traditional lender is likely not doing that, but that's where hard money may come in. So it gives you an opportunity kind of to find some stuff that may not even be on the market. But regarding anything else in addition to speed, one of the other, I'd say, really big benefits is hard money is going to look at what we call after repaired value. So meaning when you buy a property, say it's a distressed property, it needs, some money into it. What does that look like regarding, what is that property worth after all the repairs are completed? That's one of those things that we're going to kind of dive into on the hard money side. We having a recording issue?
No, we're good.
Okay, cool.
Yeah, there was a random beep in our headphones.
No, we're all good.
We're good, yeah.
Okay, so speed, using after repaired value, again, hard money may lend you that money that you need to fix up the property. So in that regard, you're not using as much of your own money. Would allow you to maybe do more than one project at once or keep your options open so you're not limited to just buying 101 Main Street, holding that for the next 6 months while you do your work. Maybe there's another property that comes up 2 months later. So speed, using the after repaired value. And then one of the other ones I think that people don't talk about as often is hard money lending is typically a little bit more flexible than traditional lending. Not only speed, that sort of thing, but let's talk about credit, right? Not everybody has perfect credit. Whether you're a 630, let's say, or an 800, hard money may be a great option for you versus you doing traditional lending. Not only is speed slow, but maybe they don't lend below 680. What does the guy who's a 660 do? Credit's not everything. Hard money understands that a little bit further than traditional financing.
Awesome.
Yeah. And I do want to we're going to talk about stats kind of throughout this because I find some really interesting stats as you and I are going through these. So,
okay, let's do it.
So percentage-wise, because I just like quizzing you, but of all of the real estate investors that used financing to fund purchases in 2023, so what percentage of those investors do you think used hard money versus traditional financing and or their own cash?
I did horrible the last time, so I gotta make up. I'm gonna say 30%.
Pretty close, man. So 40% of all real estate investors in the United States use hard money to fund their most recent project. So 4 of 10 are using this financing. Doesn't mean all of it reports correctly. Of course, there could be a few more, but you know, compared to using their own cash and or using bank financing. So, and like we said, one of the other stats, just kind of timeline-wise, is a traditional lender is probably 30 to 45 days for closing in most scenarios, maybe a little quicker, maybe a little bit longer. Yeah. Hard money is usually 7 to 10 business days. So, hey, Denver, I love your house. How do you want to close here in 2 weeks? Usually a pretty good selling point for you when you put an offer in. So,
right. Man, yeah, that's a big difference.
It really is. It really is. So, yeah, and then, you know, just, again, our goal is to help you understand really what goes into hard money loans, understanding how they can be useful in certain situations, you know, and we can kind of get into some of the mechanics here if you want to.
Yeah, I was just going to talk about that because, you know, being around some of the loan originators and the processors, I hear terms like LTV and points and interest rate. I mean, obviously, I'm a little more familiar with, you know, interest rate and what that means, but terms like that, what does that necessarily mean when referring to a hard money loan? Like, what are some of the, I guess, like I said, terms and phrases that I'm gonna see on my term sheet?
Sure. Yeah, I mean, one of them is referred to, that you touched on, is referred to as after repaired value or ARV. Again, when you're buying a property, putting some money into it, you know, what is that property worth after your repairs are completed? So that's one that a lot of hard money lenders will focus on because that, frankly, is one of the more important things. Second item we had touched on is just points. Essentially, what does a lender charge for them to fund your deal? Keep in mind, you know, rates, fees, that sort of thing aren't everything. I think it's important to evaluate the complete package of what they can help you offer or help offer to you. And we'll get into that a little bit later here too. You know, to explain that a little bit further. So, interest rate, generally, these are higher interest rates than a traditional mortgage. Reason being is it's a little bit more of a risky loan and it's a short-term loan, frankly. So, but you will find oftentimes is that hard money loans are interest only versus when you do a traditional mortgage, you know, 15, 20, 30 year, you're paying principal off on those monthly payments. So this is just basically keeping your money, you're paying the interest on it, your loan amount doesn't change, knowing that you're going to pay that off hopefully in the next 6 months or so. Gotcha. And then the term length. A lot of lenders will have some shorter terms, like I said, you know, compared to traditional financing. I think you can expect anywhere from, you know, 6 months, maybe a little bit longer, again, depending on the lender and depending on the scope of your project. So, but with the term length, you know, that's why they're good for these short-term loans, you know, is because we want to lend you money as a lender. We want you to get your project done, pay us back, and then go out and find your next project. So, kind of a cool scenario again. And if people do have questions regarding any of the topics we cover, you know, you're welcome to shoot us a message and we'll get into it a little bit further. So let's use an example here, Denver. Yes. And, you know, that way we can, you know, hopefully, you know, connect the dots here for people as they listen. So imagine you're buying a distressed property for $150,000.
I'm imagining.
Yeah, you're probably doing between 10 and 20% down, depending on experience. So let's assume that everyone here is not experienced. You're putting $30,000 down. The hard money lender, again, will give you up to 65% of whatever that after repaired value is. Let's assume the after repaired value is $250,000.
Okay.
They're going to lend you up to $162,500. So in that scenario that we just had talked about, buy a house for $150,000, you do $30,000 down. I will go ahead and give you $42,500 in a repair account, assuming that property is worth $250,000 when it's all done. So keep in mind, you're doing that, you're getting money lent to you rather than you coming up with that money out of pocket. looking at $200,000 out of pocket, right? Buying the house for $150,000, repairs, closing costs gets kind of expensive.
Right.
And again, that loan term is likely going to be, 6 months, somewhere in that range. Interest rate, somewhere it's called 15% for the sake of our conversation. But speed and flexibility are kind of the reason for those terms.
Okay. Yeah. And then obviously you have the money to do the same thing with another deal potentially.
Exactly.
Right.
Exactly. I mean, instead of you spending $200,000 out of pocket, let's just say it's $50,000 for the sake of our conversation. You're looking at doing 4 projects in the same amount of time. So
4 times the moolah.
Yep.
There we go.
You're changing your family's life a little bit quicker than 12 months, like we talked about last episode. So, really a cool process. Again, any questions, feel free to reach out.
Yeah, please do. We're always open, always willing to respond from a multitude of whether it's, Instagram DMs, comments on YouTube, and then obviously our phone lines, and just really any different way that you can contact us.
Yeah, we want to be a resource for people for sure. So we love education, or we wouldn't be doing this podcast, right?
Exactly. That's what
I'm
trying to tell these people, man. Just tune in, tap in. What are you doing? Okay, so I'm sold. I want to apply.
Okay.
What does that look like?
Well, you'd have to, fill out a link on our website. We can plug that here in the comments, I'm sure too. But
hardmoneyco.com/application.
There he is. Or you can reach out to one of us directly. But
yes.
When you do want to apply, you're gonna, like I said, go out and fill out that application. Prior to that, you need to figure out which property you're interested in.
Right.
So, let's start with you maybe going and finding a property, getting a ballpark idea of what those repairs are going to be. And then we could, kind of run through the process. We're here in Milwaukee, I think, as people know. So just an idea for you, Denver. Milwaukee County has some city homes that they're looking to sell. So they'll actually give you the purchase price, what they would estimate those repairs to be, and then what they think the value is afterwards. So kind of a cool option to even practice with that. All the information you need is right on their website.
So we're transitioning into how to go about getting approved for a hard money loan. I may have skipped the part where you find the property, but we kind of talked about that in episode 1. So I'm just, chronologically assuming that you've been along with us for the journey.
Yeah.
But wherever you want to start.
Yeah, no, let's start with you. You already have your property. You've already filled out an application. Let's talk about what it takes to get you approved.
Okay.
So every lender is going to be a little bit different on this. Again, though, hard money lenders prioritize the after repaired value and that potential profit rather than just relying on your credit score and your income as a borrower. So hard money lender, I don't care how much money you make. I don't care what your tax returns look like, traditionally here at least.
That's right.
But we do want to take a peek at your credit. Hard money lenders are really looking for 620 and above, but certainly there is some flexibility if the correct opportunity arises. So so we're going to prioritize that after repaired value. I do not care about your income versus you going to a traditional bank. They're going to do a full credit check. They're going to do an employment verification. They want to prove that your income, frankly, is steady. So a lot of investors are self-employed. Gets a little challenging there.
Yeah.
And those are just some of the barriers, really, that can limit you as a new investor, when you're going to a traditional financer. So something to keep in mind there. Does that make sense for the approval process?
Yeah, I think so.
Cool. And then let's just talk a little bit, too, about, kind of the flexibility, we'll call it, with hard money lending. So hard money lending, outside of closing quickly, we don't care as much about some of the background stuff as a traditional financer would. But we have some flexibility when it comes to after repaired values, that sort of thing. So keep in mind you're submitting a scope of work, right? Say there's a property and, hey, I'm not going to plan on finishing the basement. Okay, no problem. What if finishing that basement for $15,000 gets you $30,000 in additional value? And it takes your after repaired value to where you need it to qualify for that mortgage. As I'm saying, flexibility with the lender is important. Having a lender partnership where they say, hey, Denver, why don't you go and consider finishing that basement? I know you didn't want to. Here's what I'm seeing when I'm looking at comps. So having some flexibility to kind of negotiate there and have someone that actually wants to partner with you versus saying, you know what, you just don't qualify for this property, go find another one. So Kind of a cool opportunity there. And then, let's talk about just pure applications. Another stat for you here, Denver. But
Okay.
so let's say that you go and apply at a traditional bank as a brand new investor. You apply at a traditional bank for financing on an investment property versus you applying with a hard money lender. Of 100 applications with each lender, what percentage do you think get approved at banks versus what percentage get approved with hard money lenders?
That's tough. I'm going to say 50% at traditional and 60 at hard money.
You're close. The traditional bank approves 57% of the investor deals that come through the door. Keep in mind that may be a repeat customer, may not be a new investor, with those stats, but you're looking at 80% getting qualified with the hard money lender. Ooh. So of 100 applications, they're going to push through 80 of them. Again, because they're lending on the after repaired value, it's not based on some of the back end stuff like income. So
that's great news.
It is. So just because one company says no doesn't mean another company will say no. And it's important to explore your opportunities there.
Yeah. Really quick, I wanted to back up.
Yeah.
You mentioned scope of work.
Yes.
Could you define that for the audience, please?
Yes. So a scope of work is really what are you going to be doing regarding your entire repair budget. So if you have a $50,000 repair budget, just because I like using easy numbers, it's what are you doing with the $50,000? Hey, I'm spending $10,000 on flooring for the property. I'm spending $20,000 on a new kitchen. I'm repairing or replacing, all the fixtures, everything in both bathrooms. Great. So you're spending $10,000 on floors, $20,000 on a kitchen, $20,000 on bathrooms. Yes. So you just break that down a little bit for the lender, and then so they understand again, what are you doing to the property, and how does that affect your value after those repairs are completed?
Makes sense.
Cool. And usually kitchens and bathrooms are the most bang for your buck when you're doing renovations.
Yeah.
So something to consider when you're looking at your next project on the website.
On our website, yes. Yeah, I noticed that a lot whenever I see, or I don't know if I was talking to Scott or someone, but they were telling me that it's really easy to be able to tell which homes are a fix and flip. Mm-hmm. You just kind of look at, again, like the kitchen and baths.
Yep.
And how they've been renovated and updated. And you can tell that there's usually a lot of focus there as compared to the rest of the home.
Absolutely.
Yeah.
Absolutely. I mean, those are the areas that, people often look when they walk into a house. Can I see myself in this kitchen with my family,
right,
making dinner or whatever that is? So, absolutely. It's interesting he has the same take. So, when in doubt, listen to the successful people, right?
Right, exactly. Yeah. Cool. Okay. So, moving right along and talking about maybe why, we kind of touched on it a little bit, but
sure.
Why hard money loans are a good fit for specifically this investment strategy of fixing and flipping a home. Could you get into maybe some of the, benefits as opposed to, trying to pair this with a buy and hold strategy or something like that?
Sure. Well, I think hard money is a good option for either of those because oftentimes the renovations do have to be completed. So it's just, are you planning on buying, fixing, and selling, or are you planning on buying, fixing, and holding? And as we talked about in the last episode, this is mostly, focused on buying, fixing, but it's important to be open. If you feel like an area is up and coming for rent, maybe your, situation changes. It's always important to be open to different opportunities there. So, but why, is hard money lending good for the fix and flipper? Again, speed for closing, it can't be understated enough or overstated enough either way. But, what we're looking at is how quickly can you close and how quickly can you turn around and sell that property? You obviously can't do 4 loans or 4 different properties in a year if it takes you 60 days to close those properties. So
right.
Depending again on what your time frame is, do you have your own construction crew that's just sitting there waiting for your next project to close? Maybe that's because you're not using a hard money lender.
Right.
And the repayment schedule, like we had talked about, the majority of these loans are interest only. So yes, you're not paying down the principal, but maybe your payment's a little bit lower than it would be if there was principal on it, number one. Number two is, when you're doing that, it's going to free up kind of some of that cash flow throughout the renovation phase. So because your payments say $2,500 versus $3,000, you're saving $500 a month on traditional financing on top of getting those repairs set aside for you and that not coming out of your pocket. And again, after repaired value, we're focusing just on the repairs that you're completing and what does that property look like when you're done.
Gotcha.
And then one more thing I just want to touch on for you really quick, and I touched on it before, but it's credit, right? Mm-hmm. Not everyone's credit is great. We understand that. Right. Just because you don't have great credit, doesn't mean you're not going to be a great investor. So hard money lending, again, we're a little bit more flexible on that. That is important because not everybody knows how credit affects you long term. So
true.
If you don't qualify for traditional financing, I would encourage you to look into hard money.
So one thing that we stress is transparency, whether it's in our webinars, it's in, podcast episodes, when you call us on the phone and we're, walking and talking through these deals.
Yep.
With that being said,
yes.
What are some of the things to consider, prior to applying for a hard money loan?
Well, I think there's a few different things to consider. The first thing to consider is, the property that you're looking at, like what does it need, right? Is it move-in ready that you can just buy it and put a tenant in there and be ready long-term? So that's, kind of the first thing is I'd say it's almost property specific. But certainly some of the things when you're, considering taking out money, there's a few main things that you're going to want to look at. Number one is interest rates, right? We had talked about these interest rates being higher than a traditional loan. Not necessarily a bad thing. It is a little bit riskier for, the investor themselves. But, kind of getting an idea of what am I going to pay over the course of a year. So just selfishly gloating here, our loan term is 6 months. So on a 6-month loan, if you're borrowing $100,000 from us, you're looking at $7,500 worth of payments over the course of 6 months. Again, that is assuming, though, that your first payment's going to be due the month after you close. Fun fact, Denver, you close today, November 1st. You skip December, your first payment is due January 1st. So you have 60 days to get your project started. I know we had talked about Justin in a previous episode.
Yeah.
There's certain times that he does flips and he makes one payment and that property is often sold. So it is important, to evaluate interest rates, but again, interest is not everything. And then you're going to look at, what does the lender charge you for the money? And then what does that look like for you up front? Is it being rolled into the loan? What's kind of the situation there? So they'll generally charge points. 1 point, for example, is just the equivalent of 1% of your loan. So on a $100,000 deal, 1 point, you're paying $1,000. Oftentimes points are much more than that, but just to kind of give you a comparison's sake. And then I'd say the other thing that you want to evaluate is some of the other kind of fees. And let's just talk about one in particular, and that's the appraisal. So there's kind of two different options for an appraisal. Some hard money lenders may require an appraiser to go out to the property to take photos. They're going to pull comparable sales. That process is probably 2 weeks for that appraisal. So say 8 to 10 business days. We do a desk appraisal. So we say, hey, you're buying 101 Main Street in Chicago. Yes, I am. Sends through to our team. We evaluate everything here in-house. That process is done 2 to 3 business days. So again, points, fees, interest rate, that is not everything. Of course, if speed is important for you, having a desktop appraisal versus having what we call like a field appraisal, those are going to be 2 different things and 2 completely different timelines. And honestly, 2 different costs. So outside appraisal, probably $750 to $1,000. Desk appraisal, say $250 to $500. So you can save some significant savings there.
Yeah, 100%. So one thing that was going through my mind, and it's adjacent to what we were just talking about, is so once I've considered everything that has to, do with, qualifying for a loan and everything, or at least the benefits, pros and cons.
Yep.
What are some things that I need to have in place as a potential borrower, to make sure that this process is as seamless as possible? I know there's always, nothing's ever perfect, right? There might be some hiccups here and there, but in terms of just being like that ideal borrower or customer, what are some things that I need to have in place?
Well, the first thing is an LLC. Hard money lending, we're going to lend to your LLC. So let's say that, you start DB LLC for the sake of our conversation, getting that in order, getting your EIN number from the IRS. Like there's some other things that go into it. That process traditionally is probably a week or two. You can rush it for sure, but like anything, you pay for a rush. So definitely get your LLC in order. The other thing would be just a down payment. We had gone into this a little bit, but whether that money is coming from you, your rich aunt or uncle is gifting you the money, you're pulling it from a retirement account, just important to understand where is your money coming from, that you will need money in most situations to buy a property. So where is that going to come from? And then I would say the other piece that is extremely important is your exit strategy. So if you're planning to buy, fix, and sell, when do you need to hit the market? We're here in Wisconsin. Things slow down a little bit over the holidays. Once the snow's on the ground, not everybody wants to go outside and look at their new house. So
that's for sure.
Kind of timing when you're going to do this loan, when it's going to hit the market, and just really assessing your project as a whole. And is this attainable for me? Can I get this done in the time frame that my lender's giving me? I think those three things are the most important that you can focus on. The other stuff is going to be, property specific. How much does it need in repairs? What's my scope of work look like? So on and so forth.
Yeah.
But the three main things to just say, get ready. That's what you're going to be looking at. So, and then I want to just talk about, one other thing, just regarding we're going to call it a solid plan, right? Which has a lot of the stuff that we just had, talked about in there. But us as a lender, we're going to ask you those questions. Like, what are you planning to do with this property? I'm going to buy it and fix it and keep it. That's great. What do you think that property rents for? Is that something you thought about? We want to help you work through these things and make sure that you have as solid of a plan in place as you can to be successful. We, of course, want you to be successful. We want to be a lender for life. That speaks for really any lender across the board. But just, making sure your timelines line up for that plan and, allow us to kind of walk you through what that may look like.
Yeah, because at the end of the day, when you win, we win.
Exactly.
So.
Exactly. So, and then I just want to talk about, one other thing, which is kind of the best part of this entire piece, and that's profitability at the end of the day.
Yeah.
When you're putting together that plan or working with a lender, what does this property sell for, right? And getting a good idea of what those comparable sales will be once your property is ready to go. You need to know how much money you're going to make at the end of the day, right? Leave yourself a little buffer, have some flexibility, and set yourself up, frankly, for success. So, do your research. Find an industry professional. Reach out to Denver, reach out to myself. Find somebody who wants to help you and wants to answer these questions you may not have the answers for right now.
FYI, if you reach out to me, I am probably going to redirect you to an actual professional in the industry. I just make the content. So, in theory, this sounds great.
Yes.
Do we have any examples that we can touch on to make this a little bit more real, a little bit more tangible for our audience?
Absolutely. I guess which type of example would you want? Just someone who's recently been successful as a new investor, or just kind of talking about it overall?
Yeah, let's start with the keeping on theme and on brand here. Let's talk about a beginner.
Yeah. So let's talk about a beginner that just closed this week in Texas.
Okay.
This was on your list, actually. So this is a good one, but
Nice.
Kind of a super unique situation. So she lives in Tennessee, was looking at buying a property in Texas, has family down there, understands the market, just doesn't live there herself. So brand new investor, bought a property. I think it was about $70,000, needs about 35 grand in rehab work. So she found a general contractor in the area, had a local professional pull comps for her, a realtor that her family knows and trusts in the area. And she went in there 20% down, hired a general contractor, got a bid ahead of time. So she closed in 9 business days.
Sheesh.
But she had her ducks in a row, man. I mean, we asked her for items. She was fully prepared. She had comps. She had a budget. She knew what she could pay to not have to overpay for a property. And it took her a little bit longer to get an accepted offer on this particular one, but, her patience really worked out for her in the end. So, again, she's a new investor. She's make $35,000 when she sells this property. So
Nice.
It's like nothing more that we love than watching people be successful.
Yeah, and it's not a great salary, but it's some people's salary.
I mean, think about that, though. She's going to have this project done. Let's just say it takes her the full 6 months, right?
Yeah.
So maybe like month 5, she goes and finds like, hey, I really like the neighboring house. And this is something that she actually talked about doing is, hey, there's other houses for sale in the subdivision.
Yeah.
I'm going to make this work. Let's make these other ones work, which we're all about. So shout out Texas. But,
That's great.
overall, like, yes, $35,000, is a very good amount of money, right? She's got a general contractor, no sweat equity at all on her behalf.
Yeah.
But she, month 5, goes and finds another property, closes again in, say, 15 days when this property sells, because she'll be within that 6-month window. She's going to rinse and repeat. Maybe the same general contractor, maybe it's the same layout, maybe she has an idea of them being able to move a little bit quicker, but she's going to do 2 of these, in the next 12 months. She's going to make $70K. It's like,
Crazy.
that is a good salary.
Yeah.
And again, I mean, she's changing lives, her own life. If she's married, she'd be changing her family's life at that point, but just a cool opportunity to do it. So,
Man, yeah, I'd say.
yeah. And I just want to touch on that one more time, just a proud plug for us. She's a new investor. She doesn't live in the state. Not every hard money lender is going to allow her to buy a property out of state. Maybe they don't lend in Texas. We lend in 45 states, but
We do.
Yeah, there we go. Name a few states that we don't. No, I'm kidding. But
California.
There you go. That's the big one. But in all seriousness, she's going to be successful with this, and we're excited to watch what happens with her project. So
Yeah. No, that's awesome. That's definitely maybe we can get her to. Is she one that might be open to speaking?
yeah, I like to think
here?
so.
Yeah.
You could maybe we'll post her review in here.
Yeah.
Yeah,
And we'll figure it out.
we'll do that for you. It's cool. So I wanted just to give you a little bit of homework, Denver. We'll call it self-reflection.
Okay, I
so
like that
this
better.
is for you and the listeners. But
Yeah.
throughout this episode, we've talked about what goes into a hard money loan, why it's a good option for fix and flips. Like, you need to do your research, right? Like, let's just have you answer a couple of questions. And I don't need answers today, but just something to think about. Answer yourself in your head as you go through this process.
Okay.
Do you have a well-defined budget and timeline? All right, that's important. Are you prepared to handle the interest rate and points costs? Like, yes, you need 20% down. Maybe you need $25,000 for closing total. Are you okay with that? Does that work for you? And then finally, do you understand the local market? And then do you have the confidence in the local market and your ability to assess it to be able to know this project's going to work for you? Do you have a well-defined budget? What is your timeline? Are you prepared to handle the costs that are associated with this loan, including down payment? Do you have the confidence required to get this property done? If the answer to those questions is yes, yes, and yes, giddy up. Let's go.
Let's do it. Yeah, it seems pretty reasonable. Doesn't really seem like much that you have to mull over. I mean, obviously, know your numbers, and that's something that Justin stressed to us when we spoke to him.
Absolutely.
But it really seems like knowing your numbers is obviously it's going to make or break your deal, make or break your profit. It'll help assess your risk tolerance. So, yeah, sounds like sound advice to me.
Yeah, we like to think so.
Right. Cool. Well, I think that was enough for everybody to go through, at least in terms of just, again, thinking through the option of hard money lending and if it's, a right fit for them specifically when doing a fix and flip project. Is there anything else that I missed or that you missed? Anything that was, glaring that you might want to touch on or reiterate or anything along those lines?
Just be prepared. That's it. Be prepared. Have confidence in yourself. You absolutely can do this. Just because you haven't done it doesn't mean you can't do it. So, believe in yourself and let us know how we can help.
Amen to that. And with that being said, this has been episode, 2 in our series of, again, just Real Estate Investing 101. Very informal title. And next week, we're going to touch on actually getting more into the granular like specifics of choosing your first fix and flip project, analyzing a project, maybe dive into how to calculate ARV and comps and whatnot, and just get a little bit more, again, granular. And again, the goal is to help you through this process from A to Z. So, anything else to add?
I think that's it. Maybe we'll get Brett in here next week or the week after.
Yeah, that'd be fun.
He does our property valuation. Brett's the man. I'll leave that there. But no, we're excited for episode 3. And Denver will give us a shameless plug here on how you can reach us.
Sure will. At The Hard Money Co. everywhere that you can possibly follow someone or something, at The Hard Money Co. Our website, thehardmoneyco.com. Add a / application to that if you're ready to dive into the world of fixing and flipping right now today. And you can see how we can help you. But until next time, this has been The Hard Truths with Denver Biddle and Steve Traub. Signing off. Signing off. Peace. Have a great weekend.
Take care.